Hello, today is June the 6th, 2020. We'll go over our calls. Look for the pattern with the early high. This is it. And Monday, we're going to look for the pattern with an early high once again. We had an optional MEJT target from over 3 months ago. We finally saw that. These numbers don't always print when you want them to, but they do print. Here's what I expect to see next week. What we said was that we had conflicting signals. Commonest thing is a gap and a prompt move outside the day's range. I thought that it was more likely we would gap up, which we did, but I said it really wasn't reliable enough for me to risk any money on when you have these big numbers like employment reports coming out. I think it's somewhat of a crapshoot. I don't like those. During the day, we gave a buy signal for MEJT. A buy signal means a target at a higher price. It was hit immediately, so all it told you was that you were at resistance, that if we rallied more, that was fine, but if we dropped, it would be a false move and would have to retrace, and that's what happened. There are a number of big warning signs for a possible top in Friday's action. And there was a reason to be suspicious of this rally up here. There's a rule that the largest point move of an advance tends to occur on the day that it ends. This wasn't quite the biggest move, but it was awfully close. The same principle applies. It really applies when you gap up, hit higher highs, then close under all of them. It'd be one thing if you gapped up and rallied all throughout the day. It would mean that more and more that people didn't believe the initial rally, and as time marched on, more and more people threw in the towels and fewer people were willing to sell. Here you get this gap up, a higher high, and for most of the day we trend down. That means that everybody believed it because the gap was so big. Everybody believed it, more people believed it, but by the end of the day, when the institutions dominate trading, any time but the first hour they're in charge, except for the final few minutes, they weren't willing to play along. We also have the pattern we discussed earlier. Here at the early MEJT AM sequence, all of the closes were within the range of the reference bar. It tends to mean that institutions don't feel like taking any action. It doesn't preclude a move out of the range, but typically by lunchtime, you're back in the range. If you're not in there by lunchtime, normally you're in there before the day's out. This is far too late for a rally from this pattern to be sustainable. When you gap up like this, you want to see us moving higher as the second hour of trading begins. Even 10 minutes later is too late. This is 9:55 Central Time, 10:55 Eastern Time. That means it's not big money that's behind the move, and you have to be aware of a high likelihood it'll retrace. But what about our DeMark signals? Well, these have failed a lot, and even though I don't trade on them, I like to find out what they do. Invalidation of the signal, which we're close to getting, would be going past a certain level by a certain amount, and that we did. It's based on the closing price, and that did it. And you also have to go past that price by 1 cent when the market reopens. And that means if we gap down and we never fill the gap, that this break doesn't count. So according to his rules, we're still on a valid sell signal. Doesn't mean his rules work, but at least there's a rule. A lot of people made a lot of the new all-time high in the NASDAQ. That high didn't come close to being matched by new highs in other indices, so according to Dow theory, that's a sell signal too. Doesn't mean it won't be invalidated by all the other indices hitting new highs, but that's a sell signal, even if it doesn't pay off instantly. Every now and then we look at the long-term count. This is my count. I've given the reasons why I like it. I've added some things in red. Here's one. Wave 4 almost always takes more time than wave 2. If this is wave 4, that principle is violated. It's not an absolute rule, but something to keep in mind if you're wedded to that count. Now, there's a clear count. Might not be the only count, but there's a clear count that says the bull ended here. If so, we should have an ABC. And I can't count this as a completed ABC. So no matter how high we go, I'm looking for one more leg down, which should be comparable in magnitude and direction to this leg down. And the only question is, how high is this leg going to go? Well, if it's a B wave, it's pretty tough to be positive, but let's see if we can come up with something which at least looks pretty. I can have it ending here and justify it, just doesn't look pretty enough. Doesn't mean it won't. Here's the count, my target for the end of this whole decline. The most likely target I have is 2097.20. Now if this is A, and there's a B, you'd like it to end around 2097.20. Now here's your A. You'll notice how this top here is where it is 61.8. If wave C ends here and is equal to A, it'll end around, this is 32.99. And if it does end at 32.99, the 61.8% is going to hit that high too, and that's what I mean by pretty. Now if you connect the low of 2 and 4 and the high of 1 and 3 and draw a parallel line through this, you'll see it crosses our target on July 3rd. So we're going to have our antenna up and we're going to pencil in 32.99.06 on July 3rd for good wave balance for the end of wave B. That might not be the only number that works. I'm certain it isn't. But I'm just going to pencil it in and see if I can find some way for us to piddle around until we get to this price on that date. Well, here's the count we have. We said that often a large move comes at the time of the apex of the dashed gray lines. We got that. I told you what I didn't like about it. Now we've got some pretty wave count here. That's A and that's B and that's C. If you take the height of A, you'll see A equals C just about exactly. So it could be the end of wave B. Could be A of B, but then I don't think I'd have enough time to form a B and a C. You don't know. Be too asymmetrical. If I'm going to get what I want, the best way would be for an A, B, C, D, E, and for that the D would have to overlap this, and if the D is going to overlap that, what's this high here? It's 2837 or something like that. So certainly you'd have to go under 3000 if you're going to get the overlap. Probably under 2900. That doesn't mean it's the only count. But if it is an A, B, C, D, E, you should have an overlap. If not, then something else is going on. Again, that's not the only count. Monday's pattern has the early high. Doesn't mean you won't get down. Typically, the pattern's a rally day with a high in the final hour. Failure is a straight line drop. We gapped up, hit a higher high, closed under all the highs. It's a negative pattern. If you don't gap up and promptly overtake the Friday high, we should see lower prices. Doesn't mean you have to close lower. We did overcome significant resistance Friday, and all you have to do for the rally to continue, in my opinion, is to go past the close by 1 cent. If you go past it by that, a lot of my speculation here isn't going to look too impressive. But this is a perfect place for bears to take control short term. You have a Dow theory sell signal from the NASDAQ all-time high not being confirmed, active DeMark sell signals which get invalidated if we go even 1 cent over Friday's close, a great wave count, hyper-excessive optimism among option players. Bulls failed to follow through on Friday's opening rally. Bears have almost everything they need. What they still need to do is to gap down and fail to recover. And if, and that's capitalized, if that happens, if we gap down, fail to recover, we have the potential to undercut 3,000 and probably more than that before this bear market rally resumes. So I think the open is going to be critical Monday. It's a perfect place for us to gap down, have a sizable drop. If we keep going up, that's fine. I'm not going to predict if we have the gap or not, but if we do and it's steep and it keeps dropping, just remember, if the normal rally day with Monday's pattern doesn't happen, it's a straight line drop, and if it is a straight line drop, it's probably the start of the next significant wave down. So we'll see how we open Monday and see whether that works or not, and that's today's call.